What is that? Again, this is chapter 5, which is dealing with fraud, internal control, and cash. So first we're going to try to find what is fraud and what kind of principle we can have for the internal control. Fraud is very interesting thing. In general, is a dishonest act done by individual. It can be employee, which result personal benefits for the person or the employee at cost of somebody else. Most likely that will be the employer. In reality, there are three factors that helps that fraud to happen. First, the employee has to see the opportunity. Then we have rationalization. And the last thing we can have for this has to be some financial pressure. How this works? It's very simple. Usually, the employee is pressured from the reality, either low income, either something happened in the personal life, either something, there's some things going on around the employee or the individual. So he tried to find additional resources, finances, obviously, or something else. Depends of which area the fraud is. Then the opportunity usually presents itself. And when the opportunity presents itself, then the employee, using this rationalization, to explore the opportunity and to take advantage of the situation. Again, it has to be at cost to the employer. Now, is it possible the employee to see the opportunity and to take advantage of the opportunity, but that not to be at cost of the employer? Yes, it can be. Is that qualified for fraud? Well, that's a very fine line here. Because if we're looking directly at the definition of the fraud, is that when that is the dishonest act by the employee that results in personal benefit at cost to the employer. And remember, there are always those three factors that has to be present. Financial pressure means that something from outside that pressure the person. Then there's a internally opportunity. Person is either in a key position, either has access to the company and has something in the access in the company that gives him that opportunity to explore the fraud. And the last thing is that we have last rationalization, which actually is the act of exploring the opportunity. For that reason, since we know that there's a lot of things that happen in the past, 2020 and 2028, 2000, sorry, 1999, 2000. That's where the Enron and WorldCom was the first financial crisis happened. Then the second financial crisis was related to the house market in the United States, and that was 2008. But when the first crisis happened, 2000, this act was created, which act applied for the publicly traded American US corporations. And they required those corporations to maintain internal control. And on top of that, the corporate executives and the board of directors, they have to ensure that those controls are reliable and effective. How can we find that the control that those people imply in the company are actually reliable and effective? That's where the independent outside auditor comes to assess the situation and say, is this actually true or not? So who created that act? That will be created by the accounting oversight board, which board was the purpose of the board is to create a rules which can be applied to every company in one for only one reason, not to be to those companies not to do any fraudulent transactions. Now, speaking of this act, the interesting part is, I'm going to give you some history here. The interesting part is that in this case, I wasn't the employee who saw the opportunity. And it wasn't in the cost of the employer. Yes, here the fraud definition is the employee act dishonestly in the expense of the employer. But in everything that happened in which this act tried to prevent later in the future was actually done by the employer on the expense of the shareholders. That's why it became so dramatic, and that's why it caused that first, not first, maybe second or third financial crisis in the US history. Because it wasn't the employee, it was actually the employer who's doing the fraudulent activity on the expense and the cost of the shareholders and the public. That was the scary part. So for that reason, this act come up with the idea that we have to do internal control. What's the internal control? Internal control is a process which provides a reasonable assurance or reasonable evidence, if you want to put it this way, in regards of achieving the company objectives related to operation, reporting, and compliance. So basically, the company, when you open the company, you have a goal. You have objectives. Through the life of the company, ideally the goal gonna stay and the objective is gonna stay. They might change a little bit, but in general, they're gonna stay there. Internal control is on place to make sure that all those objectives are achieved through the operations, through the reporting, and through the compliance to the rules, which only and only rules, the objective for those rules, the reason for those rules is to company to achieve its objectives. So which are the method and how we're gonna measure that internal control? Evidence with internal control will be if we safeguard the assets. Now, here comes the question, how can we safeguard the assets? Very simple. I'll tell you how they safeguarding the assets long time in the socialistic time when I was back in my country for origin. It was very interesting way for the companies, which is government company at that time, to govern and safeguard their assets. So technically, the assets are used by individuals or employee, but the same asset is not assigned to the employee that using the asset. It's assigned to another employee. And if there's a damages on the asset done by the employee who using the asset, the employee who is the asset is assigned to pays for the damages. And that was very, very kind of interesting approach because technically, again, employee who using the asset is not responsible for that asset. Some other person is responsible for that asset. So if the employee doing something on that asset, he doesn't harm himself, harm some other person. It might be his friend, or might be his coworker, it might be somebody else in the company. And that was a very interesting way actually to safeguard the assets. And of course, the employee who's using the asset, he has another asset which is assigned to him, which somebody else is using it. So you're putting in that kind of relationship that people kind of watching for themselves. The next one is to enhance the accuracy and the reliability of the accounting records. How can we achieve this? First, we have to have, obviously, a reliable accounting software. Second, we have to make sure that the actual information is entered in the system. Because we may have the perfect accounting system, but if the person who entered the information entered the wrong information, then we cannot rely on the information, and we cannot rely on the accounting records. The other thing that will be, there has to be control over the entering the information as well. So only individuals who are objective should enter that information, which means that we have to avoid any personal interest when the information is entered. In other words, we have to put segregation of duty is called function in place. For example, the person who collecting the cash should not be deposit that cash in the bank. And the person who received the cash should not be entering the cash in the accounting system. Because if that person doing all those activities, receiving the cash, depositing the cash in the bank, and doing accounting records for the cash, we just give him an opportunity, if he has a financial difficulties, to explore the opportunity and to benefit of the opportunity. So sometimes, as you can see, the fraud is, yeah, it's happened, but mostly happened because the situation create opportunity for the person who is in financial needs to realize that opportunity or to rationalize that opportunity. The next thing is to increase the efficiency of operation. That will be more diligent on the operation, be more accurate of the using the standards that we have in order to increase the efficiency. As you know from your personal life, in order to be efficient, you have to do the things more diligently. How would you know how to do the things diligently? We're always going to have some standards. Who's going to determine the standards? Well, obviously, that will be yourself in your personal life. In the company, that will be the company. The standards will be based on the standard makers or benchmark for the standards. What will be the benchmark? Benchmark will be you trying to find the best performance on the market, on the area that you're working. And those best performance will become your benchmark. So basically will be basis for comparison in order for you to measure yourself, are you efficient or not? Comparing yourself with those. And the last one is to ensure that we comply with the laws and the regulations. In any industry, in any company, in any area of a business, we have to follow certain rules. Is it going to be law? Is it going to be standards? Is it going to be regulations? Whatever it's called. There are always rules. There are rules for the running business. There are rules for running accounting. There are rules of the accounting records. There are rules for behavior. There are rules of the employee, what an employee is allowed to do, what is not allowed to do, how allowed to do it, how not allowed to do it. So we always have to make sure that we're complying with those regulations and laws in order to have internal control in place. Again, the only reason for that internal control to be in place is to make sure that the company actually achieve its objectives. So let's try one. What will be the internal control? Why the control is used in business? Yeah, that will be all of the above, right? Because safeguarding, you have it as a method measure to adopt it. The next one is to enhance accuracy and reliability of accounting records. That's what also have it. And ensure the compliance with the laws and the regulations. All of them are related to internal control. Therefore, 5 primary components for internal control. First, we have to assess control environment. Then we have to find the risks. Then we have to find the control activities. Then there will be information and communication. And the last thing is we have to monitor the control environment, risk assessment, control activity, and the information in order to communicate and achieve the goals for internal control, which again is to make sure that the company achieve its objectives. Which are the principle of internal control activities? First one is to establishment of responsibility. How can we do that? Well, obviously, through communication, first we have to assess the control environment. Then once we assess the risk, once we find the control activity, we have to inform and communicate the responsibility with the individual who will be responsible for the operation or for the duty that he has to perform in order to company to achieve its goal or objectives. So this is the example of the cashier. Obviously, the most critical parts are the one who's dealing with cash. Why? Because the cash is the most perishable asset in the company. So what we have to do? Control, in order control to be most effective, we have to give specific tasks to the person who is responsible for that activity or for that duties. If 2 people are responsible for the same thing, then we have problem with our control. And the control is not going to be that effective. Also, we have to establish responsibility by limiting access only to authorized people, and then we have to identify those people. As you can see, something to go smoothly, you always have to be person in charge of some activities. That person is responsible. So we're authorizing that person, that individual, to deal only and only with that activity. That's how we establish responsibility. That's how a person knows that he's responsible for what he's doing. Next thing is the internal control of internal principle of internal control is segregation of duty. What that means? Segregation duty means that different individuals will be responsible for related activities. Again, if we're dealing with cash, cash is the most, the most perishable item, the most important item in the company. So that's why we have to put enough control procedures so there's no fraud around the cash. So how can we achieve that? By different individual be responsible for the related activity, which is with cash. One person again will be responsible for receiving the cash. Different person is going to be responsible for depositing the cash in the bank, and the third person is going to be responsible for entering the information related to cash into the accounting system. Now, in that case, in order for fraud to happen, all the three people has to be on the same page, which will be very difficult to achieve in reality. So as you can see here, the example of segregation duty is the one person maintaining cash on hand, the other person maintain the cash balances on the book. So the person who is dealing with the cash on the cash register is not the person who running the calculation of the cash in the register. The accounting employee running that calculation and asks the cash register, this is the cash that you're supposed to have in your cash register, how much you have. That's how you have the two people responsible for the related activities. The responsibility for the record keeping for the asset should be separate from the physical custody of that asset. So basically, for the inventory, we're going to have the person who is in charge with the inventory, or all the activity that's happened in the inventory. But we do not have another person who's going to be charged for the inventory record keeping. Those not happen at the same time. So the person who count the inventory, who is responsible for inventory, he's not the one who keeping the inventory records. Because for him it's very easy, because he knows what he's doing with the inventory, to adjust the records to match the reality. That's a happen that way. Two people separately on even if it has to be in separate location, that's even better. The other principle of internal control is documentation procedures. Yes, sometimes it's very, how can I say, bureaucratic to have too many procedures, but having procedures actually helps you to prevent the fraud and increase internal control. Company, what the simple way is to have a pre-numbered document. Once you have those pre-numbered documents, somebody has to, obviously, once they use, somebody has to put it back in order. And once you see a missing number on that order, that means there's something going on there. Or maybe just lost. Sometimes we think we try to overthink. I mean, I don't know if you actually work in the company, but sometimes I can see from my experience that sometimes when you find something abnormal, you try to think of something wrong happened, something big happened, and in reality, it's something very silly. I'll give you one example. So, on one of the company that I work in, there's a petty cash. Petty cash is a small amount of cash, which is dealt in the company. Company usually keeping that small amount of cash, no more than $200, for some small purchases like some small supplies, some coffee, milk, anything like that. which those money are accounted for, but the person who's dealing with the petty cash, he's the one who's dealing it. So in the one of the company that was working, the person who's dealing with the petty cash is the same person that keep the record of the petty cash. Is the same person who's saying how much cash is needed for the petty cash to be filled back. And that's the person who actually going to the bank and withdraw the petty cash. That's totally against all the internal controls procedures which can exist everywhere in the reality. But for some family reasons, that person was doing those things. He was a related person to the owners of the company from the family line, so element of trust, it might be there. Let's put it that way. Anyway, that's not the point. The point is, one day that person comes and tells me that somebody stole the petty cash, which petty cash was safeguarded good enough in the company on the small like a metal box which is locked in the another drawer which is also locked, and only 2 people have keys for that. So the safeguarding for that petty cash was pretty well done. None of the employee in the company knew where the petty cash is, and the company is safeguarded by the security system, and the office is locked, and everything, all the procedures on the office are in place. So what that makes it a very narrow circle of people who might actually take the cash. Again, obviously it's not somebody outside of the company, it's somebody inside of the company. So the person who's dealing with the petty cash, again, coming to me and say, because I was the financial controller, she said, somebody stole the petty cash. And she said, I know who stole it. And I said, who stole it? The accountant. Now, I was the one who hired the accountant. I know that person for a long period of time. I know how honest she is. And I know that she's never going to touch anything. And I said, that's ridiculous. That's not impossible. That's not possible. Find another excuse. That's not going to fly. Well, I know she's coming to the box, and I strongly believe that she was the one who took it. And I said, how much is missing? And she told me that the petty cash that was missing was, listen, that's very interesting. The amount that missing is $143.57. That's how much is missing. And I said, is there any cash left in the petty cash? She said, yes. How much left? $25 and something. So you're telling me that somebody opened the box, took $43.57, left $25, locked the case, and put it back and walk away with the money? Yes. And you're telling me that this was done by the accountant? Yes. I said, then why she didn't take all the cash? If you're stealing the money, I'm going to take all the cash. Why I'm going to take exactly $142.57? That doesn't make any sense. If I'm about to steal the money, I'm going to take $100. I'm going to take $20. I'm going to get $50. I'm never going to get 57 cents. That doesn't make any sense. No, you have to investigate. She's the one. I knew it, and this and this and this. And she's going even further. She's going to the owners of the company. There's a big fuss going on around. The owner of the company coming to me and she said, somebody stole the cash. I said, that's ridiculous. be careful with the statements that we're making, because we don't want to get involved with some disciplinary action because somebody make a wrong statement and somebody doesn't know how to protect the cash. Then what's happening? I said either it's accounting record, either the person who's doing with the cash, either she did something with that's exactly the same cash. So I kind of tried to find a mistake here and there. I couldn't find anything. The time passed, 1 day, 2 days, 3 days. On the 1 week after, the person who claiming that the other person stole the money, she's coming to me and saying, you know what, I found the money. And I said, where did you find them? In my bank account. I wrongly deposit the money instead of withdraw the money because she's giving a cash company check to withdraw the money from the bank. She said, I didn't get the money. The bank person deposit directly the money into my bank account. So I never get the cash. So what's the moral here? You can see that there was no, here it's purely mistake, but making statements and blaming the people of something that you're not sure that they done is not the right thing to do. For that reason, we have to have a proper documentation, proper segregation of duty, and proper internal control in place in order to avoid situation like this. Also, for the documentations, once you see the documentation, the employee should promptly forward source documents to accounting entries for the accounting department. Every time when you're dealing with the pre-numbered documents, make sure that the person who actually dealing with the documents, giving those documents to the accounting department, because the accounting department most likely is going to catch the mistake. Accounting department is your checkpoint, is everything in order. So that's why keep in mind this thing. First, establish the responsibility, segregate the duty. The person who's dealing with the actual activity, he's not the one who's doing the record keeping. Separate those people. And the last one is the documents. I know it's a little bit bureaucratic. I know we're going to the electronic age when we have all those cloud systems and everything. I'm telling you, more advanced we're going in that direction, more opportunities are created for the people. So what we're looking for somebody is just to have some financial troubles, he to explore that opportunity. So be careful. You as a manager, you have to see a little bit further than what's happening. And you have to stay always current, because as you can see, the reality changes. And reality changes very fast. If you don't stay current, you're gonna create an opportunity for the people to explore those opportunities. That's why now what's happening with all the new technology and all the new sources of income, Canada Revenue starts chasing back people for the income. Which people are those? Now Canada Revenue going after the YouTube influencers. Influencers that are the right term. Why? Because they're making money. They're not reporting the taxes, income for tax purposes. So now Canada Revenue figure out, okay, you're making a lot of money. Now pay me the taxes, but not pay me taxes only for the last year. Let's go back to 5 years back. And now you have to pay me the taxes with the penalties and the interest. That's the tricky part. So which are the principles of internal control activity? Physical count. always the physical count its work. Why? Because you can see it, you can touch it, you can count it one after another. Those are the safeguard related to the safeguarding of the assets. If when you run the records, remember now first we have the inventory. Person manager of the inventory. Inventory is received, inventory is used, inventory is sold, everything. That's what's happened during the period. At the same time, there's a record from the purchases, record from the sales, record of everything. At the end of the period, we're going to make a check. What will be our check? To see how much we have on our records. Based on our records, based on the purchases, based on the sales, we're supposed to have that many items in our inventory. Now, let's go to the inventory and check. Do we actually have those items in our inventory? That's why you're doing those physical check. The physical check is done pretty much in every place. Why? Because again, you have to match your accounting records with the physical available inventory that you have on the shelves. Also, we have to safeguard those things. How are we going to save? Well, for the cash, make sure it's in the safety box deposit on the safety vault or anything that you want to do it. If you're having the records, put it in the locker, storage cabinets, anything like that. They to be protected. If you have the computer, then put the codes. Segregate the responsibility of the users in the company. If you have the complex software, don't let junior accountant to have access to everything. That junior accountant should have access only and only to the journal entries, not for the reports. The next thing, if always you have to protect the premises by installing these alarm systems or anything like that. You can put the cameras to deal with the theft and with the stealing and everything like that. The best way to do it is one thing you should know. I don't know if I have to tell you this, but you better know it. Sometimes even the camera cannot stop people, but for that reason, what you can do is there's a one trick. You're putting a camera on top of or somewhere in the store, which is monitoring the cash, directly pointing to the cash register. But that camera is not on. That camera is only for the purpose employee to feel that he's monitored. That's the camera that everybody sees. Then you put a very small camera on the place that nobody knows to actually monitor the cash. That's how you're gonna catch if there's something going on in the company. So again, you have one camera, which is a camouflage camera, people to think that they're monitored, and then you put the real camera somewhere else for the same purpose, without telling anyone, without everybody knowing. Because once the people know something, they're gonna find opportunity how to overcome it. And that's why you step up as a second internal console procedures to put a small camera somewhere that nobody sees, nobody knows about it, but that's the actual camera that's actually recording 24/7. And if something happens, that's how we catch it. The other thing, how you're gonna have the physical control is to have that same thing that UCW has. ID cards and the security on the entrance of the premises, and those people who want to enter the premises, they cannot enter without having that security cards with their ID. The other principle is the independent internal verification. What means that two people on two different places have to come up with the same number. If that's happened, then you have independent internal verification of the numbers. So basically, we're going to run the record periodically and verifying by the employee who is independent. If there's any difference, and discrepancy is the difference. So basically, accountant tells you that, hey, you're supposed to have 5 cups on the shelf. The inventory managers says, I'm supposed to have 5. Then the independent counter comes and he found only 4. Well, we're missing 1 cup. Those discrepancy is the one that has to be reported to the management. Human resource control. We have to be careful with the people who have a key responsibility in the company. So again, part of the internal control is to identify the risk and create the procedures. So once you hiring person to deal with the cash, please don't hire gambler, person with the gambling history. That won't be a wise decision. So what you have to do, you have to do your due diligence, or run the background check of the employee. Or run, how are you gonna run that background check? First, check the previous experience, work experience. Second, check the references of the employee. And third, if you hire him to dealing with the cash or to dealing with something more important, check the criminal record. Ask him to go to the police and to do the criminal record check. That's before I start the one of the works as a controller in the company. The owner of the company asked me to go to the police station and to run the criminal check. And they're gonna reimburse me for the cost if the check is clean. If my record is clean, they're gonna reimburse me for the record check. If it's not, I'm not gonna get the job anyway. So they're not responsible for anything. Rotate the employees. You know, it's a very interesting thing here. If the employee doing something and exploring the opportunity because he has some financial troubles, that employee most likely don't want to go on vacation. Because if the employee goes on vacation, somebody can find out what he actually is doing. For that reason, if you see employee that hasn't taken vacation for years, 1, 2, 3 years, most likely there's something going on. For that reason, to avoid that one, to prevent this to happen, is rotate the employees on the key positions and require them to take vacation. Not taking vacation, not an option. Let's see one review question here. What do you think about this? The principle of internal control to not include what?
Management responsibility.
And that will be the right one. Management responsibility, yes. Now we're going to the something very interesting, data analytics, internal control. Data analytics is related to the fact that we have huge streams of information today in today's world, which has to be analyzed. First thing that we have to do is the different aspects of the journal entry can be monitored continuously. So basically, we're not only monitoring the journal entry, we're monitoring the accounts or the aspects of the journal entry. Second, every time when we're dealing with a large dollar amount, you flag it and make sure that everything is done correctly. Next one. When the cash is exchanged, make sure that the recipient is the right person who get the cash. And also make sure that authorization of the payment is appropriate. Every time when you see a large amount of money, make sure that everything is correct there. That's where the opportunities are. Remember, cash is the most perishable asset, and we easily exchange. People are usually always chasing cash. If there's something to happen in the company, that's always going to be related to cash. So make sure that you eliminate any opportunities for the employees to take advantage of the situation if they fall in financial trouble. Be more on the preventive side rather than the fixing side. Don't let things happen. Be proactive. Think ahead. Make the procedures today rather than dealing with the problems later, tomorrow. Which are limitation of the internal control? The limitation is the cost. Obviously, cost. How much you should pay for the internal control? No more than the benefits that you're having. In the beginning, when you open your company, most likely you won't think about the internal control. But if you see that there's things going on in your company, when there's a problem with the inventory, there's a problem with the cash, there's a problem with the cash register, then you start thinking about the cost. And what should I do to prevent those things to happen? So if the loss that you're having because of the activities which you have no explanation about is more than, let's say, $100, then you have to think about some control procedures. But those control procedures don't have to be too crazy. You don't have to hire internal auditor or internal control manager, because the cost of that manager will be way higher than $100. You have to always think about the human element. Those are the another limitation, because the human element is, you're always going to have a subjective opinion with the humans. As much they want to be objective, to some extent there will be an objective point. And the last one is the size of the business. If the business is small, probably the mistake will be small. If the business is multinational, multi-billion-dollar business, then the opportunities are right there. So then you really have to spend money on the internal control. What will be the helpful here? Control may vary with the risk level of the activity. For example, management may consider cash to be high risk and maintain inventory on the stockroom as the low risk. In that case, the management should be more strict on the cash rather than the inventory. Depends. That's why it's very important you to identify the areas of risk in order to put the right procedures on the right places with the minimum costs. Let's do this. Principles. Let's see which of the principles of the control activities are violated in the following situation. So first, person with the primary responsibility for reconciling the bank account and making all bank deposits is also the company accountant. So which principle of control activity is violated here? Remember the control principles.
Segregation of duties.
Right. The principles of a control activities are where they are here. Establishment of responsibility, segregation of duty, documentation procedures, physical control, independent internal verification, and human resource control. So first one is the segregation duty. Next one, Wilson Company treasurer received an award for distinguished service because he had not taken vacation in 30 years. And he's the treasurer, people.
Human resource.
That will be the human resource control, right? Because the person didn't take vacation for the long period of time. And do you see the irony of the situation? We even award him of not taking vacation. Next one, in order to save money on order slip and to reduce time spent keeping track of the order slips, a local bar restaurants does not buy pre-number order slips. Which one will be the
Documentation procedure.
documentation procedures, right? That creates opportunity somebody to flip the slips. Next, those will be the solutions. First, the violation of segregation of duty. Record keeping should be separate from the physical custody. As a consequence, the employee could embezzle the cash and records fraudulent transaction to hide the theft. Second one is violating the human resources control principles. Key employee must take vacation, otherwise the treasurer who managed the company cash might embezzle the cash and use this position to conceal the theft. And the last one is to violate the documentation procedures control principle. If the pre-numbered are not used, then it's virtually impossible for accountant for the documents. As a consequence, employee could write up a dinner sale, receive the cash from the customer, and then throw away the order slip and keep the cash. So those are interesting scenarios for small questions, for one question on the quiz 2. Obviously, those not gonna be scenarios, but what you need to know is which are the principles of internal control. And since the principles of internal control are so many, I'm gonna focus testing on the segregation of duty definitely, documentation procedures definitely, physical control, yes, and the human resource control. I'm not gonna go with the independent internal verification. That's one, I'm gonna leave it. I'm gonna go only with those 4. Those 4, the way you see it, I'm giving you 3 sets of tests. So of those 4, 3 will be tested. There you go. That's your one question from quiz 2. So what you have to do is you have to identify the which principle of internal control activity is violated, and tell me why it's violated and how can I improve the situation. Okay, that's perfect. There you go. Now you have one question for your quiz too. And that concludes this chapter. Now we're gonna, so in class next Thursday, what you have to do is you have to write me a memo. For the memo, please follow the format of the memo, which means that it has to be subject line, it has to be from whom the memo is, to whom the memo is addressed, subject line, date on the memo, and the first, always the first line of the memo has to be, the following memo will present this and this and this. The first line of the memo is always a little bit introduction. The following memo is about this and they're gonna help you to understand the situation and anything like that. Come up with some kind of phrase for the starting opening of the memo, which will be easily changed based on the situation, based on the content that you have to put on the memo. Right? At the same time, to be general enough so you can use it in every memo that you're gonna write from now on in your life. So once you have that, then you have to read the case. Once you read the case, I expect you to do some calculations to come up with the calculation on the sales, calculation on the cost by splitting the cost on the variable and the fixed cost. So you have to know how the costs behave, which costs are variable, which costs are fixed, how to calculate the total variable cost, how to calculate the total fixed cost. And you have to know when the total fixed costs are given, they stay the same. They're not changing because activity changes. Once you pay $500 for something, that's $500 regardless how many people using it. Unless you're moving to the next level. Once you buy a compass card for 2 zones, you're using it for 2 zones, as many as you want. You can use it for 1 zone as well, but you can use it for 2 zones. Can you use it for 3 zones? No, you can't. For 3 zones, you have to pay extra. Right? Keep those things in mind. The other thing is, question for you. Question for you, practical question.